I'm back with another video. I keep getting asked a lot in my sessions about the Infrastructure Investment Fund or the InvIT. The reason being because some of these funds are giving some pretty good yields. So you're seeing yields of 10 to 12%, which is attracting people. I'm also remember that these give returns on a regular basis. So it's attracting people because of that too. So should you invest in a InvIT or not? Let us first understand what is an InvIT. So the InvIT, it's like a mutual fund. So you pool together the assets from different investors and you basically invest. Now, this is also regulated by SEBI, just like mutual funds. So essentially what happens is that the InvIT allows investors to get exposure to infrastructure assets. Now remember that there are many infrastructure companies in India which are working on, let's say, road projects, electricity projects, and many other infrastructure projects, and they always have a lot of requirement of money. So what the InvIT does is that it allows these companies to monetize their existing assets and raise money that then they can use further on, right? So for example, if there is a company that's constructing roads, right? Now, again, the company will build a road and operate it over a period of time, and this could be over a couple of decades, and it will collect toll as its income, which it pays out to the investor. And but they still need money for more construction, right? And that is why they then monetize their assets and have a InvIT. So essentially, the InvIT basically pools investments that invest in revenue generating infrastructure assets, and these assets are held in a special purpose vehicle and they share income in form of interest and dividend. Now remember, 80% of the assets of the InvIT need to be invested into revenue generating assets, and 90% of all money received in form of fees, toll, whatever, in whichever form they have, needs to be distributed out to the investor on a regular basis. The payouts are not assured. They really depend upon the operations of the InvIT. So for example, if it's a road infrastructure fund, then it's collecting toll. Maybe there are other sorts of fees that's being collected. So based on the traffic movement, the toll amounts are being collected, and hence there is no fixed amount that gets paid out on a regular basis. The good thing about InvIT is that the portfolio needs to be mainly cash generating assets, and I think it's about 80% needs to be cash generating assets. 20% can be under construction assets. So that's a good thing because it also means predictability and stability of cash flows. InvITs are quite liquid. You buy them on the exchange just like you would buy stocks, and they give you regular distributions. You also can exit it on the exchange, and hence it is extremely liquid. So what is important for you to see is what is the yield that you're getting, and the yield is a combination of the payout divided by the purchase price that you are buying the InvIT at. So some of the InvITs are listed at a premium, some of them are at a discount as well. So you'll have to be very careful in, first of all, calculating what is the sort of yield you're getting. Don't go only by the payout that the fund is declaring. You will also have to see at what price you are basically entering the InvIT. As far as taxation is concerned, the interest income and dividend income is taxable at slab, and capital gains on the InvIT are taxed as follows. It qualifies for long-term capital gains if it is invested for more than 36 months, wherein it is taxed at a rate of 15%. And if you exit it before the 36 months, it is taxed at a rate of 10%. So hence, there are two ways that you're going to be making income in the InvIT. One is from the regular payouts and the other is from the potential capital appreciation That would be in form of change in the stock price of the InvIT. So should you invest? While the yields on the InvIT are looking very good, they're looking between 10 to 12% per annum. Remember, with infrastructure projects, typically the gestation period is very high, and hence there could be two types of risks. One is the operational risk. So maybe the operations may not work out the way you wanted them to. For example, I think some of the InvITs did face an issue when during COVID, they were not able to collect enough toll, right? So there could be issues like that. And of course, regulatory issues could come in the way as well, since most of these are for the government. Also getting back your investment on time, or getting back your, or getting your invoices paid on time. These are challenges that are going to be there. As such, I would say that it is a good investment and something that you can look at. My take, I would say that you can try out this as a small investment, but remember, it is not meant for people who are relying on this for a regular income, because for many reasons, this regular income may not work out, or maybe the InvIT would not work out. So essentially, what I'm trying to say is that I would not recommend conservative investors or even the retired to invest into it while the yields look really good, but still I would say keep in mind the risk of something going bad. And since these are new instruments right now, we have not seen that something going bad. So try it out with a little amount of money, but do not be reliant on it for the regular income. And of course, invest in it only if you're okay with that regular income coming in, because remember that regular income is fully taxable. I hope you like this video and this explanation of the InvIT. Do check out our other videos, and I'll be back with more. Till then, bye-bye.